Hi folks, and welcome back to Meaningful Money. Okay, here I am way up above Sennen Cove. That's the beach behind me. Beautiful part of the world where my wife was born and raised. Well, she was born in Truro actually, but you know. So beautiful day, beautiful spot. Carrying on talking about successful investing. We've talked quite a bit about that. A little mini series, if you like. Lots of flies around, see that? So never mind. Hopefully one won't settle on the lens. I have to start again. We talked about asset allocation primarily, certainly last time and the time before. Talked about strategic asset allocation last time, the taking a long-term view of your investments. So this time I'm going to talk about tactical asset allocation. But as ever, before we get into the meat of that, my friends down here in the bottom right, 7 Investment Management, who continue to sponsor me here on Meaningful Money, for which I'm extremely grateful. Now, if strategic asset allocation is your neutral, long-term view, the world, of course, isn't neutral. There's always things going on. Parts of the world, you know, up in arms over something, some economy somewhere having difficulty. The world is constantly moving and changing, and so you may decide that you want to take a view on that and to skew your portfolio temporarily based on what you think is going on in the world, and that's called tactical asset allocation. But how does one do that, right? Well, if you've got an asset allocation and you've built your portfolio using strategic asset allocation, and you've got a pie chart, if you like, with so much invested in UK shares and so much in US and all the other stuff you can invest in, well, the only way you can skew it is to sell some stuff and buy more of another asset class. I've got some people coming up behind me, but never mind. You have to sell some stuff and buy some other things. That's the only way, because you've only got a finite pot of money. And so that's the only way to sort of engage in tactical asset allocation. But there's 2 issues with that. First one is cost. Whenever you're buying or selling anything, there are costs involved with that. It may be trading charges on whatever investment platform you're using. Maybe they'll charge you 25 quid per trade or something like that. Very often there's stamp duty involved that you've got to watch, particularly if you're buying individual shares. So costs are a big factor. We've talked about them many times in our sort of Success Factors series, which was ages ago, and it's a sort of recurring theme. What you don't want to do is, in a bid to get more performance with tactical asset allocation, actually sort of scupper that by incurring too many charges. That would defeat the object. So costs are an important factor and a big issue when it comes to tactical asset allocation. But I think perhaps even more important for me, and more of a big deal, is that if you are going to correctly engage in tactical asset allocation, really keep an eye on your portfolio and move it based on what you think on the world, you're going to have to keep doing that. And that brings in a layer of complexity, time, the effort involved in keeping an eye on things. The world moves so fast, a decision you made last week to skew your portfolio may now need to be undone because something has changed. And so that you must have a sort of a careful eye, lots of time to put into it. Tactical asset allocation is about adding extra performance. Okay, you've done sort of the hard work with the strategic allocation. Looked at how all your different asset classes have behaved in the past and built a portfolio. Tactical asset allocation is about pushing it a little bit further. And can I get a bit more, squeezing more performance out of your portfolio by taking a short-term view? Now, for me, for retail investors, ordinary people like you and I with, relatively small amounts to invest, I'm not convinced this is a great idea for you to do it yourself. Certainly, we don't get involved with it at Jackson's because of the 2 reasons that I've just mentioned, the cost and the complexity of it. So think about whether it's something you really want to do. Of course, the alternative is to outsource it, find somebody else to do it. There are advisors, I'm not one of them, we choose not to do this, but there are good advisory practices in the country who do this and who will manage your money along these lines. And so you are essentially paying them to do that, which is fine. You can, of course, choose asset allocated funds. I'm watching a fly just head ever closer towards my lens. If it's going to go over in a minute, never mind. Oh no, I think it's going round. You can outsource to sort of multi-manager, multi-asset kind of funds, which will do this to a point for you. So there are ways you can benefit from both strategic and tactical asset allocation without incurring the costs and complexity of doing it yourself. So hopefully in this little series, which I'm going to wrap up next time actually, but hopefully you can see how important asset allocation is and you know how difficult it is as well. Next time I'm just going to look at sort of some classic retail investor mistakes, things that investors get wrong all the time, so that hopefully you can avoid them. So thanks for watching this one. Goodbye from a very fly heavy Sen and Cove. Thanks for watching. See you next time.